This is the audio-video file for Business Technology Chapter 2, Section 3, which is about other measures of business activity. Section 2.3, other measures of business activity. The key terms on this section are capital project, stock, bond, budget surplus, budget deficit, and national debt. Investment activities. Investing for the future can happen in several ways. Your time in school is an investment for your future. When companies buy buildings and equipment, they are also investing in their future. Capital spending refers to money spent by businesses for items that will be used over a long period. Capital projects involve spending by businesses for items such as land, buildings, equipment, and new products. The money for capital projects comes from three main sources: personal savings, stock investments, and bonds. Personal savings. A major source of investment funds is personal savings. Companies use money you deposit in a bank or other financial institution. These funds provide the money necessary for buying expensive equipment or creating new products. In return, savers are paid interest on the money they deposit. The savings rate of a country is an important factor for economic growth. In recent years, the personal savings rate of the United States has been quite low, often below 1%. This situation can cause economic concerns in the future. The stock market. Corporations are a major type of business organization. Many people invest by becoming part owners of a corporation. Stock represents ownership in a corporation. Stock ownership is commonly called equity. This term means ownership. The value of shares of stock is affected by many factors. Once again, supply and demand are the major influences. If a company has higher earnings, more people will want to buy its stock. This causes the value to increase. The bond market. Another investment activity involves the sale of bonds. A bond represents debt for an organization. If you purchase a corporate or government bond, you are a creditor. This means you have lent money to the organization. In return, bondholders are paid interest for the use of their money. Borrowing. Buy now, pay later commonly occurs in most economies of the world. Borrowing by governments, businesses, and consumers can have an important economic influence. Government debt. People expect services from federal, state, and local governments. Those services cost money. Often, government uses borrowing to finance various projects. New schools, public buildings, highways, and parks are often financed by borrowing. A government may spend less than it takes in. When this occurs, a budget surplus is the result. If a surplus exists, government may reduce taxes or increase spending on various programs. In contrast, a government may spend more than it takes in. This situation is called a budget deficit. Over time, deficits build up. The total amount owed by the federal government is called the national debt. Business debt. Loans, bonds, and mortgages are common borrowing methods used by businesses. Most companies, large and small, use debt at some time. Efficient use of borrowing can be helpful to companies. Using the funds of others can help expand sales and profits. Sometimes, when poor decisions are made, debt creates problems. Poor debt management can result in a company going out of business. People commonly use consumer debt. People commonly use credit cards, auto loans, and home mortgages to finance their purchases. The use of credit can be convenient. Often, overuse of credit results in financial difficulties for individuals and families. Careful use of credit can be important for economic growth. In contrast, unwise borrowing can result in legal action and other trouble. The ability of an economy to produce output determines its growth. The private enterprise system in the United States has worked quite well. Government leaders and citizens know that it can be made to work even better as they strive to develop new technologies and find solutions for economic problems. Various economic problems exist that need to be solved. Many people do not have access to adequate health care. Some people do not have proper housing, especially in large cities. Traffic and crime are also matters of concern for many. Too many workers are unemployed or do not have appropriate employment. No one knows for sure what the future economic situation will be. In order to maintain or increase a country's standard of living and to prevent unemployment from rising, economic growth is needed. Economic growth is important because it provides jobs and allows people an opportunity to better meet their needs and wants. That's the end of section 3 of chapter 2.